I've got cargo coverage, I'm covered. I hear it all the time from good owner-operators who genuinely believe it. And most of the time, nothing goes wrong, so nobody finds out otherwise. But cargo insurance is a lot more specific than people think, and today I want to walk you through what it actually covers, where the traps are, and the one mistake that gets claims denied more than any other. Let's start simple. Motor truck cargo insurance covers the freight you're hauling, somebody else's property, while it's in your care, custody, and control. Something covered happens to that load, this is what pays. That's the whole job. It's not damage to your truck, it's not your liability to other individuals, it's the goods on the deck or in the box. Keep those separate in your head because I see a lot of people mix those up all the time. Now here's where it gets real. Not every cargo policy defines covered the same way. You've basically got two kinds of forms. The first is called a named peril policy or a named peril policy form. That one covers the specific causes of loss it actually lists out, like fire, collision, overturn, theft under certain conditions, maybe a few more. If your loss doesn't match something on that list, there's nothing to pay. It's as simple as that. The second form is called broad-formed cargo, sometimes called all-risk form. That one covers losses from any cause except what is specifically excluded. It's a way wider net. For a lot of operators, it's worth the extra premium, but, and hear me on this, all risk has never meant everything. Even the broad form has exclusions. Exclusions are important, so let's talk about those now, because this is where good drivers get surprised. And I want to be careful here. I'm not telling you your policy handles every one of these the exact same way. I'm telling you to confirm how your policy treats them. Don't assume. So the first exclusion I want to discuss is theft from an unattended or an unlocked truck. A lot of policies limit or flat out exclude theft if the truck was left unlocked or unattended. It was just for a minute is not a coverage strategy. Number two is reefer breakdown. If you run temperature-controlled loads, breakdown of the refrigeration unit is commonly excluded unless you've got a specific endorsement. No endorsement, that spoiled load is on you. Number three, right alongside it is contamination and spoilage, often carved out unless the form is written to include it specifically. Number four, freight left in a dropped or unattended trailer. Drop and hook is handy, but coverage on a trailer just sitting there can work differently than the coverage on a load you're actively hauling. Number five is called the striking exclusion. This is especially important for heavy equipment haulers. If the item you're hauling strikes a pole, an overpass, a power line in transit, damage to that load is typically excluded. Tall load, low bridge, know your policy and how it treats this before you find out the hard way. Number six is loading and unloading. Loading and unloading coverage is excluded from many class codes, such as household goods moving, unless we specifically endorse it back to the policy. Now, why does everybody in the freight world make such a big deal about cargo coverage? Because brokers and shippers require it. They'll set a minimum cargo limit before they'll even give you the load, and they usually want to see the coverage right there on your certificate. Depending on the cargo type, many brokers will ask about specific exclusions to your cargo policy prior to awarding you the load. It's their customers' goods on your truck. If your limit's too low or the certificate doesn't show it, you can lose the load before you turn a wheel. All right, and here's the big one. The mistake that denies more claims than anything else is hauling outside of your commodity class. Your policy is rated around what you told them you haul. Step outside that and you're risking a denial on a loss you thought was covered. Look how different the risks actually are. General freight, that's your baseline. Stable, predictable, easiest to insure. Household goods movers, moderate, higher risk with potentially high value unique items, your risk goes up. Auto hauler, that's the premium. High value items, completely different loading and unloading scenarios, the risk goes up yet again. So if your policy is built for general freight and you take an auto hauling load, you may have picked up a risk your policy was never priced or written for. And that mismatch, that's exactly what an adjuster goes looking for. One last thing, and it's not cargo at all. If a load spills and there's an environmental cleanup, that cleanup cost is usually not on your cargo policy. Pollution and spill cleanup typically have to be endorsed separately. It's one of the most expensive surprises out there, worth confirming you've got it. Here's the good news. We're an independent agency. We work for you, not one carrier, so we can look at how you actually run and lay your options out straight. Tell us what you haul and how you run, and we'll review your cargo classification and coverage line by line. We'll make sure your limits hit what your brokers want and flag anything worth endorsing before it turns into a denied claim. Call us, 850-389-2001, or head to barbiejackson.com. Barbie Jackson Insurance out of Crestview, Florida. Your goals, our strategies. Catch you next Tuesday.
Make sure you like, comment, share, and subscribe so you never miss a video. See you on the next one.